Memory names are unwinding. Bitcoin is back and TBPN is still on vacation. Can you believe it? 2 back-to-back days of vacation. But we're not venture capitalists. We are higher class than that. We trade, invest in the market. So let's take a look at the market and make sure that we understand what's going on with these memory names. Because if you've been following SanDisk, if you've been following Mu, Micron, if you've been following all these different names, well, you know that they were basically the only source of strength the last few weeks. And unfortunately, unless you're buying oil companies, that strength seems to have dissipated. So it is what it is. This is Micron after sort of the Leopold, not sort of, literally, the Leopold unwind. It had a little bit of a bounce here, okay? It was looking, with Seagate, like there was some movement coming back, some motion, but the unwind came at the same time as well as the SPY starting to unwind. Initially, not that you can look at the SPY and know what individual names are going to do, but SPY is made up of individual names. So about 40% of the SPY, S&P 500, is Mag 7 names. So that's Meta, that's the M, Microsoft, right? Apple, Google, Amazon, that was the one I was missing, Tesla, and Netflix, okay? None of which look that great in my opinion. Everybody has their own way they look at the market, but that's what's going on right now. So if you were looking at SanDisk, it took a little bit of a breather. It's no big deal. It had a pretty quick momentum burst out of this sort of confusing earnings reaction and started to move up, but definitely took a little bit of a breather here. So anytime there's strength in the water, blood in the water, people are excited, an area of the market is heating up. If you're there immediately, you're in a good spot, but if you're not, you're going to have a bad time. And that's what happened to people who were looking to get positioned in SanDisk and other memory names. So that is memory. But another area that we want to take a look at is Bitcoin for sure. Bitcoin has been a little bit of a laggard for a while, months actually. Hasn't really done anything interesting at all. It's finally curling up, showing a little bit of strength, but it's been a bear. It's been rough. And we don't want to read into individual days too much. If we look at Bitcoin as a whole, that's BTC futures, you'll be able to see the actual value, okay, 64K, really high off that. Well, if we really zoom out here, there we go, 127K high. So some people could say, hey, Bitcoin could be having a moment here, finding some sort of support after a long, long, long break. I mean, this isn't crazy long, but it's coming up on a year, right? And we're nowhere close to returning to highs. So it's definitely something to be aware of, to have on your radar, but not something to bank on. So memory names, unwinding, Bitcoin have a little bit of strength, but nothing that is really super exciting. And then outside of those two parts of the market, well, besides the TBPN crew being gone, we have to just look and say, what do people care about? Okay, we're live and we are going to have guests at some point who are market related. And for that reason, we're going to go check in on those guests right now and see what people are up to, because people are always up to something. Before we do that, I do want to take a quick look at market sectors as a whole. This is always fun, just looking at anything that sort of jumps out and surprising, right? Is there anything that's super surprising? You're not really, right? NVIDIA cooled off. NVIDIA was actually looking, and we'll take a quick peek here because we just can't resist it, right? It's NVIDIA. Was looking pretty constructive, taking a little bit of a pause before earnings. No big deal. Just let that be. Microsoft, a little bit of a bounce there. Amazon, not really doing too much, but both of those were off their highs pretty significantly. So that's what's going on there. And then when we look at anything else that really matters here, I mean, we don't really care about Apple, frankly. Maybe you do, but there's nothing real exciting here, in my opinion, after a pretty weak earnings reaction. And then as you sort of look around sort of the horn here, you know, there's some weakness in semis. That's what we're seeing with the weakness in the memory names. And there's also some weakness in some of these data center related names, the power generation names. So that is the prognosis. Whenever you see green in energy, oil and gas, or healthcare as the you know, hot sector, you have to be a little bit worried and a little bit unexcited. It is what it is, but we're in the middle of the summer, right? I mean, Tesla really doing nothing. It's just not the hot space right now. So if you're looking for rotation opportunities, I'm not sure this chart itself is going to do it for you. I mean, it's a great, super broad picture of the market, giving us what the big names are doing. You can sort of see how they're doing in relation to their peers. Maybe security is an important one to watch here. FTNT, CRWD, the big ones, Palo Alto Networks right there. But other than those sort of massive sectors taking a break, there's not a lot that unwound like memory did today. I mean, that was pretty significant. And there's not a lot that looks that constructive or worth taking a bite at, because Bitcoin just doesn't look that exciting. Software has been on a lot of people's radar. When we do look at the software ETF, it cooled off a little bit. That was a much needed break. I mean, it'd been on an absolute tear, stair stepping up a couple times. But when we look at individual names here, we're talking about stocks like Cloudflare taking a little bit of a break, Mongo taking a break, Twilio, stocks like that coming back a little bit after a really solid earnings reaction. So we'll see what happens heading into the end of the week, and with the FOMC minutes tomorrow. Those will come out tomorrow at, I believe, maybe 8:30 a.m. Is that right? Sometime very soon. FOMC meeting minutes, actually 2 p.m. tomorrow. That sort of checks out. 2 p.m. tends to be FOMC time. So could be a market moving event. I don't think it's going to be that much of a market moving event, but it's definitely notable. So that's pretty much the whole docket. That's 10 minutes of live streaming, and that's the whole docket. That's what happens when you're used to doing videos and then you're just jumping on live. But welcome in. You can see scrolling down below, we do have those best 6 AI stocks for August. And by we, I mean me. I picked those out for August. You can grab those free stocks at the link in the scrolling ticker. That's selfadvisors.com/Sam. That's me, selfadvisors.com/Sam, just so you know I picked those out. We're not some big operation here. And you'll also see my recommended newsletters. So I'm just typing that here in the comments to get those 6 AI stocks for August. We're about halfway through, a little bit, halfway and a half, you could say, through August. Again, those are updated every month. So we're not trying to give you a new stock every day to run around and chase. More so just trying to give you a broad view of the market and go from there. we are able to get those chats up on the screen as well. We'll be showing those here, so you can ask those away, and they'll be populating there. But in the meantime, we do want to check in on what other people are saying about the market, especially people who are interested in these rate expectation changes happening potentially tomorrow at 2 p.m. I don't think there's really going to be that much that they're going to say that's going to be a big disruption, but it will be interesting to see if it does sort of give that market a little bit of a boost or not. And yeah, I'm just typing on X to get those best AI stocks at selfadvisors.com/SAM. SAM. Gonna just do my name there. So it's super easy for everyone to know. That's what we got going on. So we're just gonna assume people on X are sort of, you know, basically trickling in. YouTube's the main event. And if you do have questions, if you have questions about memory names, question about Bitcoin names, you know, the Bitcoin miners are now turning into NeoCloud names. There's been chatter of that. Stanley Druckenmiller actually taking a position. He's basically the Warren Buffett of hedge funds in some NeoClouds, or well, in some Bitcoin names. I should be careful with my words here. So some people saying that maybe, you know, what's happening is with them transitioning to AI compute, there's less of them that are actually just doing Bitcoin, which is what they're supposed to be doing in the first place. But we'll see what he's up to. We'll see what other people are up to who have put out their 13 Fs, which is basically just a description of what they bought months ago. It is what it is. We don't get to see what, you know, David Tepper or the top hedge funds. We don't get to see what Leopold bought until after he's bought it, right? After Citadel has already bought something a month later, 2 months later, then we get to see it. But if you do have a ticker, go ahead and drop it in the comments. Otherwise, we will continue with the program here. So this is basically home base, right? And there's a couple names I want to check out here that I think I want to keep on your radar. So this is one, Market Wizards. So if you're not familiar with Market Wizards, it's basically a book where they write down and audit people who invest. So this guy had something like 1,000% return. That's why we follow him. His name is Lucas. And we could take a look at, I'm actually not going to show you his subscriber posts, am I? This gets a little bit tricky, doesn't it? So how do we do that? I'm not sure I'm going to be able to show you his posts as a non-subscriber. I guess we can do that. That's not really fair to him, right? So if we do go to the short bear though, you'll be able to see what he's sharing with everybody, okay? So European banks, he is from Germany, so we could pretty much ignore that, but it's, you know, not something to completely forget. Interestingly, for people who are interested in Bitcoin, this has been the chatter about Bitcoin for years now, right? Is can you put some money and stake that money in Bitcoin? Can you have a little bit of, as they call, income from Bitcoin? Sounds pretty suspect, right? I think so, but this is Lucas. He again, he's in this book, okay? Unknown Market Wizards, the best traders you've never heard of. So you've never heard of him. It doesn't make for the best sort of content when I talk about people you haven't heard of, but this is sort of what we're talking about. Amazon.com, 2,500 into 50 million. These are the type of people who are in this book. So average annual return of 300%, and sort of the types of results that sound absolutely insane until you realize that this guy, you know, went to graduate school and stuff and audited these guys. So he's kind of all about getting things right. So, you know, no one likes books, so we're going to really quick exit out of this. But if you're interested in Bitcoin, this is someone who's very much focused on Bitcoin, giving you a little bit of a picture of what you can do with that Bitcoin. okay? And this is maybe a little bit of an extreme language, but you basically get what's going on. Imagine putting 500 grand in tokenized stock into a collateral account and then basically using that. It kind of sounds like a home equity line of credit or something that's guaranteed against the house, taking a loan out based on the equity you have in your house that you've paid off your mortgage. But and this is all very advanced stuff. It's really not, but it's just you want to get it right. So if you're looking for a resource, this is sort of someone who might be in the right category for you. Now, with Bitcoin being up the last couple of days, there are some institutional players who maybe had played a part in that. This was some, if you want to have your own wallet, right? You aren't going to be buying IBIT, okay? So IBIT is a Bitcoin ETF. And when we look at IBIT, it has really had quite the move in the last few days. I don't want to oversell it. I mean, you can see it on the screen here. It's not crazy, but it's notable after Bitcoin's been sleepy for so long. So this was August 13th. Since then, you know, we've had a little bit of a move up, okay? And this is the volume that's notable. So is now the time to get into Bitcoin? I can't say that. I don't think anyone can say that. But there is an actual fundamental catalyst along with a little bit of a chart theme, I guess you could say, with a slightly, you know, a hold here of support and then a move up, okay? We're not going to really pretend that we can just do fundamental analysis on Bitcoin for more than a few minutes. But that is Bitcoin, and that is staking on a Bitcoin from a very trustworthy source. So other sort of names, copper, this is actually a few days ago, right? But just understanding what's setting up, what to be aware of, what to have in your portfolio and be a little bit careful about. FCX and SCCO, those are the big copper names, which did have a bit of a move. We can see that they're actually down a little bit right now, but notable rotation here. And you can look at longs, you can look at shorts. SCCO, I would say it's not in a spot I would want to short it personally. So copper, you can look at with HG. Copper as a whole, futures haven't moved a lot. Recently had a little bit of an unwind, but if we're looking at similar commodities, gold, silver, GLD for gold, or SIL for silver, there's not a lot cooking for those after a couple weeks ago. There's nothing really exciting about positioning opportunities in those or copper, which would be this, okay, copper futures. So that's the market. That is the sort of Bitcoin staking opportunity with that hack, which led to the fundamental opportunity, fundamental catalyst of inflows into IBIT, Bitcoin ITF. We talked about memory names unwinding, MUNSTX, and SanDisk being the main ones. And then we talked a little bit about basically software as a whole, and software unwinding, holding slightly, but not really in a place where you want to buy it and not really in a place where you want to short it, in my opinion. So those are the stories of the day so far. Software, Bitcoin, and memory, but we are blessed with eons and eons of time. And with that time, we do get to take a look at what other people are up to. Here's another market wizard. Again, that is someone who has been audited to have $100 million of profits. It's quite a lot. And we can take a look at what he's got to say too about the current market, which can be a little bit broad. I mean, as a intraday trader, he's also sharing a little bit more of a psychological approach to managing risk. But something that has been coming up again and again is the 24-hour overnight trading, which most people would say, you know what, if I wanted to trade 24/7, I would trade crypto, right? I would go to, God forbid, you know, you want to step inside some sort of Las Vegas casino. Most people don't, right? But there does seem to be a move to offering more overnight trading. Lance himself has had some serious wins in overnight trading, particularly on events like GameStop and the like. So it's nice to just know that you do have some liquidity there if you need to get out at 4 a.m. or wake up at 4 a.m. That is the overnight trading conversation. I don't think there's anything really new about that, but this is another person to take a look at. Take a look for a follow and see if there's anything on here that sort of strikes your fancy, okay? Workday is definitely something, is a great example actually of the dichotomy, to throw out big words for no reason, the split between private equity, venture capital, and hedge fund type investing, right? Intraday trading or multi-day trading, epic opportunity on Workday. So what he's talking about is very different from what people have been talking about who are interested in buying software. This is pretty in-depth, but I'm pretty sure the general thesis is that, well, this was probably an opportunity on the short side, if we're being real. A little bit of an unwind here after a big move up, okay? But it's also such a quick opportunity that it's not really something I would talk about here in general, because it doesn't make any sense to, because most people are just looking for longer term opportunities. So if you're looking for longer term opportunities, you're in the right place. You can grab those best 6 AI stocks for August down below at selfadvisors.com/SAM, selfadvisors.com/SAM, to get those best 6 AI stocks for August. You also get a list of my recommended newsletters. So any type of market approach that you're looking to take, whether it's more of a gold angle, more of a Bitcoin angle, more of an options angle, more of a retirement angle, more of a, passive angle, as in you're not buying and selling more than like once a month or something like that. Or maybe you're looking for longer term ETFs. Maybe you want to buy something once a year or less. Or maybe you're looking for stock fundamental picks, fundamental stories about the AI build out that you can get behind and look for some alpha there. Those are what we offer in those newsletters. You can see those newsletters actually scrolling down below on the screen. And you can see all those newsletters once you get those best 6 AI stocks for free at selfadvisors.com/SAM, SAM. All right. So those are 2 people which each made about $50 million or more, definitely more, I would say, for at least one of them in the markets. And yeah, give them a follow if that is some type of information that appeals to you. So current market wise though, we do want to look at what else people are up to here. We looked at memory names, we looked at Bitcoin. Bitcoin is back. It had a little bit of inflows here, and people are going to be ranting and raving about Anthropic IPO, I think, for months after the big SpaceX IPO. This is interesting that this is trending now, with Cathie Wood talking about avoiding memory stocks, given that, well, they had such an important day today. NVIDIA actually cooling off a little bit too. And this is basically the main thesis here, is that there's going to be less of a need for high bandwidth memory. So if that's true, that's definitely been the story for a lot of these memory names. And the memory squeeze has made those things absolutely squeeze. They've gone up a lot. Cerebras is sort of limping along after its IPO. You could say it looks a little bit better than SpaceX, arguably, although SpaceX pretty much is getting back near its IPO high. I'm not sure this is really a bull flag personally, but the most notable thing about SpaceX being that on the lockup day or lockup release, which would be, I guess, I don't remember the date, but 3 months after this IPO, that doesn't make any sense. It was one of these days. it didn't sell off, right? It kept going up. So that was the big surprise there. It's often often a surprise when it comes to lockup dates on really big names. If you're on really small names, well, who cares, right? Lockups mean that the stock's probably going to go down, but also who cares, because there's so many other little players that can mess with the liquidity that it's not really worth playing around in that arena unless it's $1 billion plus market cap for the most part. But that is something to be aware of if this becomes a recurring theme where there's not a need for high bandwidth memory. I would say that, Kathy Wood saying that is great, but I'm not sure she has sort of the pull that, Leopold has sort of taken her thunder, maybe. If he came out and said that, that might be something that would move the market. Or if, one of the CEOs of one of these Mag 7 companies said that, that might be something that would move the market. But I don't know that her saying that really has anything to do with the market move today. So that's something to be aware of, though. Definitely a talking point for sure. And NVIDIA is holding up there. So no need to get too amped up over the high bandwidth memory conversation yet, in my opinion. So the 2 Sigma case continuing. This is totally tangential to the markets, but basically the Spark Notes, I think, the TLDR is that this guy founded 2 Sigma 1 year before he married this woman, Laura. And her argument, they're divorcing now, is that, well, you were only doing it for a year. So, it's not like he had this company for like 5 years or 10 years. This company's worth like $50 billion, by the way. It's not like he had this company for 5 years or 10 years and then got married. It was more like he had the company for a year and then he got married and then it grew, So it's kind of like it's their company, especially if they're in California. They're not, they're in New Jersey. But if I know anything about New Jersey, I don't know that it's going to be the most pleasant, experience for these guys, both of them. So anywho, we'll keep an eye on that. That's definitely extremely, extremely relevant to moves in the market. Kathy Wood, we already touched on. SK Hynix is definitely going to be something that is going to get more and more eyes on it. That's SKHY. I can barely spell it. The liquidity there is immense. The moves are insane. The gaps are obnoxious. And they exist, right? Because SK Hynix is a South Korean company, and so it trades on the South Korean exchanges and trades at the opposite hours. It's an ADR on the US exchanges. So that's SK Hynix. We'll keep an eye on that. Now, there are going to be more 13Fs coming out over the next week, I think. I haven't seen a ton. And again, it's one of those things where it's like, do you just ignore what people bought and sold? Do you ignore that Peter Thiel bought 15, 20% of this Argentinian company? Probably, right? Do you ignore what Stanley Druckenmiller and Warren Buffett are doing, which is both holding Google? Probably, right? Is Google that interesting right now? Not really, right? Does him buying Stanley Druckenmiller buying Google signify anything? No, because the 13F came out here, right? And then if we look back, I think it was probably here when that buy would have actually occurred. And I don't know that we get the exact date, but there's a definite delay. So something to keep in the back of your mind, but not get too centered on when these buys actually happen. That's the other thing that happens with CEO buys. He's not a CEO. I guess he is a CEO of his investment company. you have to wait, and they don't have to disclose immediately when they buy a company. So it's not useful for us. Now, another type of CEO buy that can be useful, of course, is people buying their own company, right? But you also have to look at how many shares did they buy relative to what you think their net worth is, or relative to basically the liquidity of the company. A great example would have been yesterday, actually. Well, I'm just looking at Palo Alto because Nikesh Arora, he's the CEO of Palo Alto, he bought his own company and the stock's done great. I don't know exactly what he bought it, but it doesn't really matter, right? The company has been going up a lot. Robinhood, I don't know if it's Robinhood. Was it Robinhood? The CFO of one of these companies like Robinhood sold something like $30 million of shares yesterday. Oh, I think it was Reddit, yeah. And the stock sold off. But, that's one question where, did it sell off because the CFO sold 30 million, and people saw that and were spooked? More likely. Did it sell off because 30 million actually makes a difference on a day when it traded $6 billion? See this 6 billion down here, 6 billion and change. 30 million definitely didn't initiate that move. So when the CFO sells shares, it's probably a minor factor in the actual stock price. This was more likely, a gap up and a sell off, just like a profit taking, than anything to do with the CFO selling into this specific move. And it's possible that CFO bought and sold these shares as part of a pre-planned sale. So they were already had a date that those were going to be sold. Thank you, McAfee, back from the dead. So that's 13Fs, and we're going to keep looking at people who have little bits of alpha here, because they do poke their heads out. Clifford Asness is definitely in the hedge fund conversation, managing, if not right now, billions. He's definitely capable of doing it. And so as long as he doesn't get snarky, we got to look and see if anyone says anything useful about the market. It's a little bit of a double-edged sword being on Twitter, right? Because some people, they fly pretty under the radar, like Trader Kane. He's probably one of the most well-respected crypto Twitter heads with real results, partially fueled by the pandemic liquidity boom, but now looking like he's getting a little bit more interested in stocks, which is really a theme these days. In the last 3 to 5 years, people saying, you know what, maybe it's time to play a bigger game. So shout out to him. It'd be great to have him on the live show. But there's a lot of players here. Ariel's talking about CrowdStrike, PanW, and Rubrik. And if we take a look at those, they're doing fine, but they're definitely taking a breather here. He wrote that 18 hours ago, I guess. So that would have been sometime here, right, yesterday. They're definitely taking a breather. Full disclosure, I am short a Zscaler. I don't know that, that was the best idea in the world, but with the Rubrik and PanW CrowdStrike group breaking down, it did seem like, maybe security is going to take a little bit of a breather. But someone to take a look at, Ariel Hernandez, he's talking about cybersecurity, and he talks about stocks just about every day in just about every single format you could imagine. So give him a follow. This guy's just funny. He normally posts market-related stuff, but every once in a while he gets sort of religious. Now, who else is a player here? And a lot of these guys, the challenge is you don't know who's behind the name, right? But if they keep posting interesting stuff, you got to give them a follow. Would it be great to have a Bloomberg terminal? I guess. Is it necessary? I don't think so. So CBRS Cerebras is one of these, companies they would talk about on the All In podcast, one of these VC companies. People are all excited that they just went public, but as a public markets investor, that doesn't really do us any good, right? Because we're trying to buy it once they're selling to us. So unless you got pre-IPO shares, which isn't always a great deal. I mean, people are getting pre-IPO shares in Anthropic. I mean, it's still pre-IPO. Maybe it'll be pre-IPO for 5 years. No one really knows. The valuation could cool off, and those pre-IPO shares could be way less valued than they currently are. But Cerebras definitely, it's just trading pretty rocky. I mean, this is crazy. Move up and down, which I think is what he's getting at. But that's kind of day trader focused. This is an AI company. I mean, it's definitely a company to keep aware of, but it's not something that's super exciting to someone like me when there's so many other opportunities in super liquid established names to take a look at. So another one to take a follow, give a follow though, Negligible Capital. It would be great to have him on the show. Chop it up for 15 minutes. You don't have to use his real name, actually. You can't even see my name on here, right? So how that would work we would just have, I'd give him a link to this live stream, and then he'd just be able to hop on. It'd just be like a Zoom meeting, and it would just be live. So that is pretty much that. I think the other challenge with Reddit as a company, if you're trying to hold that company, is they did do that licensing deal with ChatGPT, but who knows how well that licensing deal actually went, right? Okay, so this is the statement from Klaus that ChatGPT actually stopped indexing Reddit, and it's gone down significantly after that change. And this does look pretty significant the way it's measured here. PromptWatch is such a great name. So if that's true, then more companies are going to look to try to license their data if it actually gets enforced, which it could be. There's two ways you could look at this. You could say, if you're trying to buy Reddit, if you're interested in buying it after this little pullback, is it more valuable now that it's done these licensing deals and ChatGPT and these other LLMs presumably are going to follow suit and not cite them? Is that more valuable? Does it make it more likely that people are going to go to Reddit and view ads and generate impressions on reddit.com or on the Reddit app? Or is this sort of a little bit of a cooling off, a gradual decline for Reddit? Because a lot of people, don't even know what Reddit is, if you can believe it. And they just come upon it by going to Google, going to, previously, it seems like ChatGPT, and they would surface results. And probably what happened was people were clicking off and staying off, right? So just like in Google, when they would give you those 10 blue links, the way those blue links were organized, right, was by page time. So how long someone spent on a certain page would then rank that link higher when someone would have a certain query. And that actually, Google liked that because that was sort of Google's product. But with ChatGPT, what their product is maybe a little more amorphous. So how good they are at delivering an answer, just because you don't get the perfect answer, you're probably still going to come back to ChatGPT, right? Because you're going to ask it so many questions. So if you go to ChatGPT and they serve you Reddit and then you get distracted and you don't come back, that's a lot of page time on Reddit, but it doesn't really do anything for ChatGPT because they might feel that they are sort of training their users to go and just go straight to Reddit instead of asking questions on ChatGPT. It also could just be a strictly legal thing where their counsel or whatever said, hey, they did the licensing deal. There's the New York Times problem as well. And you just got to not have Reddit links at all. So who knows exactly what's going on there, but we do know that it's a scary time if you're not an AI-enabled and AI-first company. And these sort of information wars are going to get more and more heated. But this guy's interesting. He seems like he shares interesting stuff. He's a co-founder of an AI search. This is so it was SEO, right? And now it's AEO, so algorithm or AGO, whatever the thing that surfaces results in algorithms. This is a guy to watch for sure. It does have implications for the market simply because the market is basically AI. It seems like Ryan Klog here is chiming in with some arguments about whether or not to buy ETH. If you want to give him a follow, he's great for anyone who's interested in getting a message out there. So you're raising money for nonprofits, you're interested in getting your business leads, this is the guy for you. But you're here for markets, so he also talks about markets now. Give him a follow, Ryan Clogg. All right, so this is definitely an interesting story as well. This is another great follow, Akash Gupta. This data center problem is not going away. There was a statement that, the rich towns basically aren't going to have data centers in them, which someone then corrected. There was a community note here on X with someone saying, actually, the wealthiest town in the world does have data centers. So depending how you look at it, it seems like data centers are here to stay and growing. And there might be some sort of creative, not just financing, but creative literal geolocation of the data center state lines. This guy consistently does drop very interesting research, though. So give him a follow. Maybe we'll get him on the program if he's interested in that. Now, as far as broader market opportunities, it's going to be sort of hit and miss as we go into late August. I don't think there's any sectors that are especially bubbling up. I could be wrong. We'll see what happens. But I don't think this is a reason to hop out of equities and go trade futures. It's actually, I think, very, very hard to be profitable in futures. Extremely hard. Maybe the only saving grace of futures at all is that you need so little money just to get started. And there are some tax implications as well, which are good that they exist, but probably not something that, is going to be smart to do long term. But if you are to do that, I think this is the guy to take a look at. That's Trader Nick FX. So maybe we'll get him on the show. Go give him a follow. He definitely goes live and has a lot to share. As far as other news, total trading volume in tokenized equities. This is what Lance was talking about with that 24/7 trading. And Mag 7 stocks, which again are basically the stocks, the market, cooling off a little bit. In the case of Microsoft and Amazon, people have been talking about Meta as a possible dip buy opportunity after this sort of cool off. But I think it's a little bit of a falling knife opportunity here, so I wouldn't get too excited about that personally. But that's me. Some people buying the dip is what they live for. So if you're looking at a fundamental argument for Meta, if there's a specific ticker that you have have a fundamental thesis for, well, maybe buying a dip doesn't really matter. 10x operating cash flow, QCAP is calling. I'd love to know exactly what he's talking about with this is your tobacco moment for the 17th time. I think he's saying that this thing is going to get crushed. But I don't know. I mean, it certainly looks like a dip in terms of operating cash flow. Some people are talking about Meta in terms of the suit. They did have to pay out that family for their kid who was irreparably harmed, maybe like $5 million or something, which doesn't sound like a lot until you realize they paid that out to one person, a teenage girl. So if that thing really balloons, it might have just been sort of a token lawsuit, token victory for, the common person. But if it does turn into any sort of tide of opposition, doesn't really matter what the operating cash flow is or what the chart looks like. Meta is going to be a little bit of less of a darling for sure. So, which was crazy because look at this thing. This thing has gone on an absolute tear from the bottom. So it certainly doesn't look that healthy, right? It looks like if it breaks this $500, Meta doesn't sound like it's that interesting, but sentiment matters a lot right now. Jaguar Analytics sharing a lot here of red. This is what we've been seeing. Nebius may be the most notable here. It's not down the most, but it might be sort of the canary in the coal mine for the next week as we go forward into Fed minutes tomorrow and into next week, just given how deep this sort of pullback was after earnings. And I don't know why I just looked at CBI, CLS. I'm just used to looking at these fiber names, I guess, after their massive unwind last month. But this is not too concerning yet. Typically, you'd want to look for a hold of, where the stock closed after their first green day. This is again a NeoCloud name that's gone on an incredible run. It's in the same vein as SanDisk and the other memory names, but everyone took a breather, including memory names yesterday. So I don't think it means too much, but it's kind of coincidental, if not interesting, that he has that highlighted. So he might have been looking at it on his chart, but give him a follow. Maybe we'll get this guy on if he wants to. It might be private, Jaguar. But continuing on here, as we look into the stories, it's just going to be again and again and again memory names. Everyone's talking about memory. This guy's interesting as well. Peter DiCarlo. I've seen him before. I don't really know what he's up to, but it's interesting. He talks about systematic trading, and he's talking about SanDisk, because most people who are talking about SanDisk are actually talking about not so much systematic trading. They're more talking about, well, what most people would say is fundamental trading. I mean, memory. It's the memory constraint is upon us. So give him a follow, see what he's got going on. Looks like he took profit in some of these optics-related names, coherent in that same group as Lumentum and Applied Optoelectronics, AAOI and LITE. But seems like he has some interesting things to say. He's certainly talking about the things that are interesting to most people right now. So that's Peter DiCarlo. And as far as some of these buys, we did mention this 18% in Vista Energy, the Peter Thiel buy. I don't know that that's really going to be something that people are going to get that excited about. There's not a lot of liquidity there. It's just barely getting over that $100 million liquidity. So sort of right on the edge of a company that would be interesting to most people. But VIST is the ticker. It is an ADR, so it's going to trade a little bit sloppily, just because, of course, it trades. Well, we are actually in the same time zone, so this should trade a little bit better than something like SK Hynix. But that's the one to keep an eye on. VIST. So that's SK Hynix, SKHY. So interesting when those 13Fs come out, but not always that actionable. That is for absolute sure. Anthropic, gonna be interesting if it actually materializes into something. But most people are not really seeing this as quite as exciting as SpaceX for whatever reason. I don't know that Elon just has some sort of pull that, Dario doesn't, in terms of mobilizing the public around something. I mean, people have been hearing about Tesla for years. Elon, of course, quite controversial. But Dario is doing his fair share, stirring his fair share of the pot as well. So we'll see what happens as we approach a possible Anthropic IPO. I don't think there's definitively as much excitement as there is about a SpaceX IPO, but there's definitely going to be some appetite there. Because people know what ChatGPT is. They know what chat is. That's literally what they call ChatGPT. They might or may not know what Anthropic is. They might or may not know what Claude is, but they definitely know that AI is the only thing right now. So this $500 billion number is notable. That's Ross Hendricks. If you want to take a look at what he's up to, they definitely do a lot of good research over there. Okay. So as far as sort of bigger term economic activity, long-term yields, we can talk, we can beat the dead horse again and again, say, look, if yields are going to be so good, 5.3% or whatever, 5%, why buy stocks at all? And you know what? If you're buying the market, if you're buying and selling the market on a regular basis, maybe that's an activity, a conversation you want to be in. I personally don't really see any reason to have that conversation. I mean, it's important to talk about rates sometimes, but in general, this is sort of a minor little conversation point. It's sort of useful in economic textbooks rather than something that really will move individual stocks or sectors. But you know what? If Sonali wants to come on the program, we'd love to have her and chat. She definitely has the chops of what we're talking about. I just don't know how to really apply that in the market right now. I mean, we can look at the 10-year, right? You know, it looks great. We can look at the dollar. It came down a little bit a month ago, but hasn't really moved too much. But really, at the end of the day, if you've got money in the market, you're looking at SPY every day and you're trying to say, is there a sector that's really worth positioning into? And really the only space right now that I see is some of this aerospace, specifically Lockheed Martin. I actually mentioned it in the daily video today. So, but give her a follow, Sonali Basak. So other names in general, we could talk about, you know, Mag 7 until the cows come home. But this is so long-term thinking that I don't think it's really that interesting. I mean, 700 million raised doesn't even really, you know, change public markets much when you have companies like Anthropic raising $700 billion and being the talk of the town again and again and again in this race between Anthropic, OpenAI, Grok, and Meta AI. So individual stocks, much more interesting for the most part. People are definitely going to be talking about debt issuance. Odd Lots is a very great podcast. You can follow these guys if you want. Tracy Alloway has certainly shared information that makes a lot of sense in the past. I don't know how this specifically is going to help you unless you're only invested in the Mag 7. But you can see what she's showing here is this insane liftoff of hyperscaler debt. So as it approaches banks and we start calling the hyperscalers banks, it is going to get into territory where people start throwing around the, you know, the R word, regulation. I think it's not something to really worry about as a shareholder of any of these companies right now. But if you're trying to play the AI boom, you know, the debt issuance, the circular financing is the story. So give her a follow, Tracy Alloway. Great to have her on the show as well. Now, as far as people coming up with individual ideas, people will be talking about meta again and again and again. People will be talking about stories that are relevant today, particularly the Guggenheim story. But I don't think most people are really exposed at all to Guggenheim's insurance instruments, except maybe indirectly. So although this might be sort of a branding snafu for them, a messaging morass, I don't think anything about you know, technical details of Guggenheim is really going to help the average investor. I just don't. I mean, it'd be great to talk to Donut, but yeah, I don't know if that's really going to be momentous for you, the listener. If it is, we can chat about it, but that's why we have the comment section, and we can get cranking on any of those tickers that you want to take a look at as we come up to hour 1 of our 3-hour Monday through Friday show. So bonds are going to be the talk of the town, the yields, the minutes tomorrow, but for the most part, we're just looking for individual stocks and saying, is there any sort of sector rotation that makes sense? Now, Amit, to his credit, the Japan story is pretty significant. People were definitely worried about the carry trade and the debt story with Japan. But as far as actually buying equities that seem to be linked to that, it was the memory names, right? And that link doesn't seem to be that worrisome anymore, or something that people are talking about every day. I mean, people are talking about the Kospi, all the time, but you don't hear talk about that right now. So I don't actually know that this little pullback in memory names has anything to do with the Kospi, which is kind of a nice break, if we're being honest. I mean, to be worrying about Asian markets again and again and again, it just gets tiring because it trades, at like a 12 hour difference. But it's definitely still talking point, something to be aware of. And I agree with him. What he's saying here about tech names taking a little breather is totally normal. I think the charts certainly show that, and it's no surprise. I mean, Chris Camillo had a huge $10 million win on Amazon. For them to take a little bit of a pause is completely normal. Just makes sense. Now, as far as the humanoid story, people have been looking towards Tesla's late August release. They have a Cybercab release in late August. That rollout is in Texas. We'll see how that goes. We're kind of in no man's land, technically, looking at buying opportunity just based on inflows into the stock. Something that's just grinding up is kind of, a bummer. You'd rather have something that has a little bit of a momentum to it. It's a bad example because it's past earnings, but everyone, of course, knows that this was the breakout of all breakouts back here in Tesla. Absolutely crazy. So if you could get something a little more constructive like that back in mid of last year, about a year ago, then it would start to be interesting, but we're not really seeing that way. And look how low the volume is on Tesla right now. So the humanoid story might be real. People might be excited about it, but for the most part, it's not really something that anyone's paying attention to with any serious, repeated interest. It's exciting. It looks great. But I mean, unless LeShrub has some sort of, people on the ground, I don't know that there's really much to talk about with humanoids yet. But give him a follow. Give Brett Adcock a follow. It'd be great to have LeShrub on and talk about humanoids for sure. Now, gold, people have been talking about for a while. It is interesting talking to Forex folks about gold. But, what's the prediction, right? Gold's going to surprise you if bond yields continue to fly higher. I think if we just look at the chart itself of gold, well, people are very excited about $4,000 gold. We did achieve it again. But remember where we were at up here. This is when we achieved 4,000 for the first time. And it's reassuring to have it hold, but I'm not sure the last week really tells us anything about gold fundamentally. So, in fact, these companies too, NEM and AEM, these gold miners, they don't look super bullish in the way you would want them to look. I mean, the volume is coming down a little bit, so there could be some opportunity in some of these stocks, but they're not really giving you those high or low combined with a little bit of a volume dry off and then sort of a tightening of price that would be associated with a really exciting opportunity. So there could be fundamental reasons for gold, but until it actually confirms, there's nothing really to talk about there. So here's a little bit more about the Reddit story. This guy has been on top of pretty much everything. Honestly, this guy is always popping up. But his thesis is that if LMMs are just going to regurgitate Reddit, they basically need to stop doing that, because it's crazy. Because on one hand, Reddit is like a source of truth, right? It's a source of sort of vicious, brutal honesty in a lot of cases. Sometimes it's a little bit depressing, honestly. It's a little too far. But at the same time, these companies, these are the most valuable companies in the world, OpenAI and Anthropic, they also kind of want the impression, maybe it's a facade, maybe it's a branding play, of being pretty serious companies, like sources of knowledge, curators of knowledge. Google. Google wouldn't really want to associate with Reddit directly, right? And Google serves Reddit results, but Reddit is kind of like the underbelly of Google, right? And OpenAI, it seems like, is trying to take that stance as well, where they're saying, maybe we're going to keep Reddit at arm's length. So definitely interesting. Give this guy a follow. We'd love to chat about him, chat with him about this conversation. So see if he has 15 minutes. But Cremu, it's a accent aigu, I think, right? It's going up. Cremu. We'll give him a follow. Now, interesting take on the Mark Wachter Guggenheim conversation. Carvana, right? Carvana hasn't really looked that appealing for a while now. It ran incredibly in 2021 and did unwind, but it's been pretty rough, right? The past year. We had a little bit of a return. The 2021 story sort of got repeated, but at least within the past year, there hasn't really been something that's that interesting in Carvana. Even today, even if this recovers and goes sideways more, it's just not showing the same type of interest as when you have, upward action combined with cooling off and then further all-time highs. So Carvana has definitely been a story, renting cars, selling cars. I don't even know exactly what they do, but car insurance is a huge business. So it's definitely an interesting take, the Guggenheim linkage. But we'll see if ABS Capital, it's funny, ABS sounds like anti-brake system, right? But if he does own a big stake of that company, which then seems to have a link to Carvana, it's definitely something worth taking a look into. But of course, with Carvana already pulling back, I don't know who really cares, right? It's not like it's something about the memory name. So most people are just going to ignore this, I think. But anchovy definitely coming up with something delicious to snack on there, if you're like have an appetite for fundamental nuances. Anyway, we'll see what else is real material here. We could talk about bond yields until 5 o'clock, but I don't think it's really going to be moving the needle on anyone's portfolio today or tomorrow or next week. In the middle of August, of course, is a little bit of a quiet period for everybody, but particularly with the market pulling back after the situational awareness blow up, there's just not that much going on. Now, there will be stuff going on, and we'll be here to cover it because depressingly, this is what I've decided to do. But yeah, we'll see. We'll see if anything pops up, anything worth a look, any sort of sectors worth talking about in detail. This person has been on it as well in a number of different scenarios, so definitely worth a look. This is a little bit eyebrow raising for sure, but self-insurance is, I guess, I don't know the details there, but it's not in and of itself cause for serious concern, right? A lot of families do self-insure. They'll work through like a chug or something, and they'll be like a subsidiary. But it sounds like maybe they took the whole self-insurance thing a little too business oriented and sort of ran out of credit here. So it'd be great to talk about that whole private credit situation with a junk bond investor. I don't know how private this individual is, but yeah, DMs are open. We can tag him for sure, her for sure, whoever it is, and see if we can chat about this, because this is definitely something that could rock the market. I mean, I don't know the ins and outs. Just because there's scrutiny doesn't necessarily mean there's fire where there's smoke. But with that other anchovy capital bringing up the Carvana linkage, we can look and see if there's a news event related to this, but this is definitely worth keeping your eyes peeled to, anything related to Mark Guggenheim related holdings. So in other news, I'm sure there's going to be more OpenAI security discussions coming out every single day. First Squawk is always on it, squawking a lot. But this guy, he has sort of an interesting relationship, right? So he's the tech guy of OpenAI. Believe it or not, Sam Altman is not really the tech guy. You know, he might not come off as the most like sales guy, you know, the front man, but he's the front man. So the back end is run by Mr. Brockman. And this may be sort of a stance saying they're strengthening security and monitoring in the wake of sort of the Anthropic and government friction that occurred a month ago. Of course, David Sachs maybe being the most vocal in that friction, trying to be impartial as to allying with OpenAI or Claude, but definitely saying, hey, you know, if you're just not going to help the Defense Department or the government's use of defense resources, well, what are you really doing here, right? So I think Anthropic might have stepped on a little too many toes, and there's been some reverberations around the market as a result of that. So we'll be keeping an eye on that for sure. But OpenAI doesn't seem to be going public anytime soon, so there doesn't seem to be anything actionable from that. Anyway, now as far as other things happening here, this guy is definitely on it all the time as far as actual companies. You know, when earnings, Fabrinet earnings is interesting, but as far as buying opportunities, like buying dips is nothing I want to do. GLW might be a company in that vein, in, you know, the electronic components vein. If you have your tickers, your company sort of separated out, you know, you can see Keysight, maybe another one that all sort of looks the same chart wise, you know, pulling back. But all in all, I think looking at the market is just healthier as a whole than looking at any of these individual companies. Just tells more of a story than any particular earnings. Although it's interesting, it's helpful to at least keep an eye on it. But there's just not that much going on. This is the launch of the Cybercab. We're going to be keeping an eye on that as well. But we already looked at Tesla. There's just no volume there. And Uber, look at Uber, there's not really anything going on there either. So strong earnings, but this is actually a little bit of a weak pullback as a sort of contrast. If you look at Airbnb, this is very strong, right? It doesn't look excellent, but it looks pretty good. If you want an example of a stock that really did look excellent coming out of earnings, maybe a company like, let's see, ETN, I think had a move that was pretty strong up here where it just held, boom. Yeah, that one was a doozy to the upside. So yeah, there's some big company news there, but for the most part, those little earnings stories, we can basically just leave to the wayside. Now, as far as other sort of market opportunities, this guy definitely has some interesting stuff to say. He's interviewed some absolute power players, including the Long-Term Capital Management former founder or co-founder. Long-Term Capital Management being the smartest guys in the room, sort of Enron fame, but of the late 90s, if I am dating them correctly. So they blew up. They bought some Russian bonds or something and, you know, had a perfect mathematical model that didn't have events that hadn't occurred yet, and new events occurred. So Nicholas Nassim Taleb was, smiling for a rare moment. And yeah, there was a black swan there, and Leopold repeated it. And yeah, but he's talking about prediction markets here. I didn't know how much liquidity is really available in prediction markets, but I guess whoever's early to it will have the edge, of course. So be cool to talk to Ethan Coe about prediction markets. We'll see if we can have him on at some point. We'll give him throw him a hello for sure. Now, as far as other opportunities for Bitcoin, the big story with Michael Saylor for the past year has been, I'm not going to sell. I'm not going to sell. I'm never going to sell. And oh my God, did strategy sell? I mean, this was absolutely insane. Pretty much a 30% retracement for a multi-$100 billion company, if I'm sort of getting it right, is crazy. This is actually more than 30%, right? Something like that. Strategy does look like it could come back to its level as of a couple of months ago. But it's hard to get that excited about it. That's for sure. MicroStrategy has just gone nowhere. And even after earnings, there's been no buying activity. So a lot of people have been interested in BMNR as well, which has sort of gradually been moving up, but no real activity there. Or maybe they're trying to buy Ethereum as an ETF. No real activity there either. So you just have to be very slow and very cautious with these massive Bitcoin-related derivatives is really what they are. They're instruments to buy Bitcoin from institutions who didn't want the risk of buying Bitcoin, or they didn't want to they weren't able to raise money for funds that deployed into Bitcoin directly. So strategy was a nice sort of laundering tool for them. But, maybe we can talk to Blockspace about this in detail at some point. But for the most part, I don't think there is anything that's that exciting about Bitcoin at the moment. So coming up in an hour and a quarter, let's see if we can find a little bit of content here to just, make you guys somewhat satiated here. Flock safety definitely has been on the docket for a while. Nebius already sort of showed its cards by unwinding a little bit yesterday. And the guy who called Macy's says SpaceX is a $10 to $30 stock, and it's way overpriced. So maybe he's learned from his, over exuberance and is cooling off a little bit on his expectations, basically stating that, maybe everyone getting excited about SpaceX isn't really that big a deal. But let's listen in to some Hunter Brook here. This is tangentially market related, but it's really more just, this is what people are talking about. And, I want to be a little bit removed from the situation personally, to be honest. But let's listen in here and see if we can actually get a little bit of a broader view. Hunter Brook has been at the forefront, definitely, for a long time. It's sort of breaking these stories. So that's what we're going to try to do. And also going to make sure you guys are aware, you grab those best 6 AI stocks down below in the description. That link is selfadvisors.com/best. And you also see a list of my recommended market newsletters. If you're interested in gold, you're interested in sort of retirement opportunities and more of a slow passive type approach, you're interested in options, you're interested in Bitcoin or maybe Bitcoin staking, whatever your cup of tea is, we have a buffet of options available for you after you've gotten those best 6 AI stocks by scanning the QR code or going directly to selfadvisors.com/Sam. You'll get my best 6 AI stocks that I grabbed from August. I grabbed them in August. And yeah, you'll be able to grab that. But in the meantime, we do want to take a look at what Hunter Brook has to say, because I think these guys really do good work. And frankly, it's just interesting. So we'll make sure that we can play this. If you can't, please let me know in the comments, but should be able to hear that for sure, even if this is disabled. But yeah, we will see. We will see in just a moment. Mark Walter is, of course, kind of in the spotlight because of the connection to the Lakers as well. So the Lakers, being a sports team, everyone's interested in it. And the other angle here, presumably, is that you don't really want to sell a sports team. The whole idea of buying a sports team is it's kind of well, not an instinct, impulse buy, but potentially something that you hold for a long time. So yeah, I'll take a listen to this and we will chat about it in just a moment. Sorry to talk over it, by the way, as well. But we just want to talk about this, to be fair. And I know you guys can't hear it because you guys would be commenting in the comments if you could hear it. But we're getting to it. I'm a little hesitant with how they're presenting this information, to be real. But if you can't hear it, it's no big deal because it's almost over. We'll circle up on this in just a moment. And I do know that there definitely is a way to make sure you can hear this. So we're going to make sure you can hear it. But yeah, we are sharing the audio, so should be able to make sure you guys hear this.
The Lakers are being sold for $12.5 billion just a year after they were bought for $10 billion. Sounds pretty good, right? $2.5 billion profit in a year. That would be kind of good, but you don't buy a basketball team to make 25% in a year. You buy a sports team to pass it down to future generations, which raises the question, why did the Lakers owner Mark Walter sell the team to Josh, totally not Jared, Kushner, and Bob Iger? And the answer is pretty interesting. So it turns out that Lakers owner Mark Walter is being investigated by the Department of Justice. They literally seized his phone and laptop as he was getting ready to board his private jet. Basically, Walter owns insurance companies. And the way insurance works, life insurance in this case, is people put money away, and the insurance company is supposed to invest that money into assets so that they can pay you an annuity or pay your loved one if you die. The thing is, there are some rules around what those insurance companies are allowed to invest your money in.
Thankfully, I realized you guys can hear it, so I shut up.
And one of those rules is around whether you can invest in your own companies. So if you're Mark Walter and you own an insurance company, but you also own, say, an investment firm, sure, you can take the money that people are giving you for insurance and you can have your investment firm go and invest it. But generally, if there's a related party, that's what that's called, you have to disclose it. The DOJ is investigating 2 different insurers who underplayed, allegedly, the extent to which they had related party transactions with Walter. What we found at Hunter Brook is that there actually appears...
Okay. So does that actually matter for the market? Not at all, right? Not in the slightest. But if you do see any sort of big unwinds, like the Carvana linkage was definitely interesting from Anchovy. I would continue to just be aware of that. So it's definitely something to think about. Another thing that people have been thinking about recently has been the $100,000 a month data feed from Trump, which has maybe been unprecedented to say the least. But the fact that that data feed has been, you know, there's been massive market moves around his tweets. Well, it's not surprising people are paying for it. So.
Traveling from India to California with an unshakable dream to be the scientist.
How many people are watching?
Can we tell how many, Dan? How many people are watching?
She's talking about how great San Francisco was before she destroyed it. A lot of talk about childhood. We've got to get to the border, inflation, and crime.
He's not proposing a single policy, not one policy proposal.
Harris's biography won't lower your prices at the grocery store.
Or at the pump.
Out there putting veterans out on the street, so
33,000 homeless veterans. Gotcha. Okay, say
Turn that up for you.
the things of which she complains.
Should be super loud.
Of which she complains.
In many ways, Donald Trump is an unserious man.
Oh, you hear that, Phil? It's great, right? Ready? These prosecutions were all started by her and Biden against their political opponents.
Sorry about the comments.
Me.
You don't really need to see my
Get that out
face.
right away.
Have of caravans heading to the border, people showing up to the border with Biden-Harris t-shirts. Everything we have of people swarming the border.
She paid bail for rioters in the Minnesota Freedom Fund.
She paid and raised bail. She paid bail to get the violent rioters in Minnesota out of jail.
Tim Walz let Minnesota burn. Kamala Harris bailed out the ones who lit the matches.
Put it in there. Put it right in with the stuff, right?
With that post.
I got one for a big A approach. The NVIDIA.
You could do it either that or separate.
say more lies, lying about the Project 2025.
Oh, lying against Project 25, which she knows, and so do all Democrats, that I have absolutely nothing to do with.
She says we all know what a second term will look like. We can say yes, no inflation, secure borders, the best economy in the history of the world, and peace.
She said chart a new way forward. Is it turning a new way?
Chart a new way forward.
She's done nothing but harm.
All right, guys. So that's a little bit of a insight into what people are paying for. They don't get the cinematography, but I think they do get the tweets, the Truth Social tweets, and they've been pretty crazy. I don't think we have to actually go to Truth Social, right? I think we can just go to, I believe, we'll listen to this guy too. We might want to have him on the show at some point.
Yo is going to be in a world of trouble if you are reading mispriced assets. Mark Walter owns the Lakers and the Dodgers. Scratch that, no longer the Lakers, because he has been forced to sell. I believe the majority of his assets are encumbered, and he is actually on death's door as far as being a billionaire goes. And I think the Dodgers are next. It looks like he's going to sell Chelsea. What has he done? He bought insurers. He figured out, oh, glitch in the game, free money. You just buy an insurer, and you take their money that the policyholders have paid, and you put it all in all your investments, and you get free funding for anything that you want. Well, he didn't even do what Apollo and Athene does. Why? Because he's stupid and arrogant. He decided, instead of going through the commissioner and getting a permission slip, basically, it's ridiculous how easy these permission slips are. apparently, because they're everywhere. Instead of doing that, he just said, yeah, nah, you for unaffiliated. You for unaffiliated. He is tied to Delaware Life, ClearSpring, Equitrust, Aquarian. Actually, Aquarian split, other Guggenheim guys. And Salmon's Financial Group. Salmon's Financial Group is $130 billion. I just came out with a story with Hunter Brook, and I was working, and it was the first time doing a Google Doc since college, and anyway, I was like trying to get my words in. I'm like, oh my God, yeah, that's great. It was rapid fire this weekend in order to come out with it, and the bonds tanked today, 98 to 91. Also, the bonds tanked on Delaware. Also, the bonds tanked on ClearSpring. And by the way, I forgot about Security Benefit. Todd Bowley, the other partner, the founder of Guggenheim, who's also going to be in a tremendous amount of trouble. You might ask, well, where did these guys get all this money from? The answer is insurance companies, guys. I've been telling you about insurance companies for how long? How long? And all of a sudden, I got some friends. Oh my God, I was out in the woods for a long time. It was me and Tom Gober. Well, it's happening. The regional banking crisis of insurance is upon us. What is yet to be seen is if this becomes a systemic issue. And you know my view, yes, it will. Now, could it be delayed? Could it Guggenheim fall apart? And it's gonna fall apart. And then all of a sudden we get a respite. Sure, that would be like the summer of 2007. But don't say I didn't tell you so. You guys are wondering why I'm not doing enough TikTok videos. Guys, I'm busy. Go meet me where I'm working and can distribute.
I think we had enough of that. When he starts talking about TikTok, we got to tune out. But basically get the idea. There hasn't really been market moves specifically related to that $20 billion required payment. But there could be, is basically the whole story. So, you know, that's it. That's about as much as we know. And it's worth keeping an eye on. It's not like any insurance companies are even that exciting to be buying in the first place. Yeah, so we'll see. But something to be aware of. Now, as far as opportunities for today, I mean, people are going to be talking on and on and on about NVIDIA's financing. Notably, this company, SB Energy, is pretty important. This is a potential, this company could IPO. Rich Hosfeld is the CEO. Definitely like to talk to this guy. But people were very excited about the SpaceX IPO. This company, the SB is SoftBank, SB Energy. This is the potential next IPO. I know this guy, Richard Toad, he knows the inside scoop. It'd be great to talk to him about this company, SB Energy, because it's definitely at the exact epicenter of the data center build out right now, the eye of the hurricane, you could say. So give him a follow for sure. Now, as far as sort of, investigative stories, this guy's pretty interesting. I've seen him a few times. The beard is pretty recognizable. This is in Texas. Texas notably did have that slowdown on data centers, but definitely is not saying no data centers. And it's definitely been one of the more pro data center states in the entire country. It's not surprising given what Texas stands for. But you know what? I think there's a lot to whether this actually gets built out. And if they can continue to get, it's tough because they need to get the country to get behind it, federal, state, local. Plus you just have random podcasters talking about how data centers are basically, Satan. So we'll see what actually materializes from this, but this guy's been talking about it for a while. It'd be great to have him on the program, talk to him. But Richard Toad. All right. Now, as far as other opportunities that are interesting right now in the markets, so we come up to close. It's about an hour and a half in to today's show. And memory names, as the namesake goes, memory names did unwind. Bitcoin is back. It's both been pretty big stories, both of those. I mean, Bitcoin has been away for a while, so we'll see. But pretty exciting. And people are going to keep talking about this story. We've been talking about this, but I don't really know if we're going to get an intelligent take. I mean, maybe this guy has got it for us. Let's see.
$20 billion of loans off his insurance company books by December 31st. There are 4 ways that he can do that. 1, he can sell the loans to somebody else, but nobody buys paper when it's under federal grand jury subpoena. 2, he can grow his company, but it would have to be 4 times bigger in the next 2 quarters. 3, he could reinsure a block of his business, and that hands good assets to somebody else and leaves the bad
4 times is a lot.
Loans behind, so the ratio gets worse instead of better for him. Or 4, he could sell things and use the cash to pay his loans back. So 3 of those doors are shut to him. The Lakers were the 4th one, and they covered only about a third of what he needs to cough up by the end of the year. So I spent $80 on 2 documents almost nobody buys to find out what's left. Mark Walter owns 2 life insurance companies. In February, both of them got grand jury subpoenas, and they restated their books entirely. Delaware Life,
starting to sound like a script, isn't it?
Life had been
I'm one to talk if you look at my YouTube videos.
reporting $1.3 billion of investments in businesses. Walter also owns. And after the restatement, that number was $18 billion. It went from 3% of everything the company had invested to 42%. So Bloomberg reports that the Delaware Department of Insurance wants nearly all of that unwound by December.
Let's see if we can chill a little bit on this comment thing. Should be good. Maybe that worked. Anyway, we'll get back to this.
December 31st, and Walter's people have been telling reporters the next set of filings are going to show that the number is dropping by as much as $8 billion. So I actually bought the filings for the quarter right after the restatement. The number didn't drop, actually. It went up, $976 million. Nobody's been charged with anything here. Investigations by prosecutors end without charges all the time, and his company says that it's cooperating and everything's kosher. If you're new here, this channel and me, I read the documents, not the headlines about the documents. So you hit subscribe because there's a filing landing in the next few days that settles this one way or another. A concentration limit is a fraction. On the top, how much money the insurer lent to businesses its owner also controls. On the bottom, it's everything that the insurer has invested. At Delaware Life, that's $19.8 billion on top, $48.2 billion on bottom. So it's about 41%. So door 1, selling the loans, you'd be asking someone to buy $19.8 billion of private illiquid loans made to the owner's own companies, which a federal grand jury is currently looking at. Whoever buys those loans buys the investigation that's going along with them. No buyer has appeared, and I don't think one is going to come under those circumstances. So then you got door 2, getting bigger. This one's just math. To get $19.8 billion down to 10% of what you've invested, you need.
Let's see if we can just turn this overlay off entirely. That's better.
To have to grow to $198 billion. Delaware Life has $48 billion. It grew by $4 billion last quarter, and that was already double its normal pace. So you keep that up to get to $198 billion in 35 quarters. He's got 2 quarters left to meet his deadline, so that's out. Door 3, the one selling off the loans to reinsurance, but you got a problem with that. You hand a block of your business to another insurer, and they take the best part of your business. It doesn't get solved that way. That's a backwards approach. When a reinsurer assumes your liabilities, they want the assets to back them. Good ones, liquid, marketable, investment grade. Bonds they can price and sell. What they won't want is a pile of subpoena loans to owners' affiliates. So the good assets walk out the door, the loans stay exactly where they are, same problem, which means that the bottom of the fraction shrinks while the top doesn't move. Cede $10 billion to a reinsurer and 41% suddenly becomes 52%. That's the opposite direction. So the clever solution makes it worse, which leaves door 4, the borrowers pay the money back in cash. And who are the borrowers? Mark Walter's other businesses. For them to have to pay it back, they need money. And for them to have money, he's got to sell things. That's the whole reason that a basketball team as storied as the LA Lakers changed hands in 72 hours. Every insurer files a quarterly statement with its regulator, and buried in it is a section called General Interrogatories, question 13.2. What are your investments to affiliates? What were they at year end? What are they now? So Delaware Life, as of March 31st, year end, 18.25 billion, March 31st, 19.8 billion, up $1.5 billion. And the other company that you don't hear as much about, ClearSpring Life and Annuity, year end, 5.89 billion, March 31st, 5.32 billion. So they went down 572 billion. If you put them together, you get 24.1 billion becoming 25.1 billion, up 976 million. So in the first quarter, where the company was under a grand jury subpoena and had every reason to show progress on the exact line a regulator had told it to shrink, the number went the wrong way. And you look at those two companies again, because they're going in opposite directions, right? ClearSpring genuinely unwound. The dollars were down and its concentration went from 59.
All right, so we should be able to have this on with no opacity. I don't know if people are, you know, oh, I see, you got to show them. Let's try that.
59.4% to 52.5%. That's a company actually fixing the problem. Nobody's written a word about ClearSpring. It's the more concentrated of the two, and it's the one that's actually making progress. But Delaware Life, on the other hand, added $1.5 billion. And here's the trick. Its percentage still went down 41.6% to 41.1%. So how does the number get bigger and the percentage actually get smaller? Because the bottom of the fraction grew faster. Delaware Life's invested assets went up 4.3 billion in 90 days. That's a 9.8% growth in a quarter for a life insurance company. Nothing was unwound. They grew around it. I can show you where the money came from because it's actually in the cash flow statement for the company. Deposit type contracts. Those are funding
This is just pure AI slop.
Agreements and guaranteed investment contracts sold to institutions, not to families. They're the fastest way on earth to put assets on a life insurer's balance sheet. Net deposits last quarter were 1.6 billion. The average quarter in 2025, 805 million, so twice the pace. Roughly half of it just sat there in cash. Cash and short-term investments went from 5.3 billion to 7.5 billion. And I want to correct one thing before somebody else does. The premiums looked like they jumped 78% year over year. I thought that was the same, but it's not. Full year 2025 premiums averaged 2.96 billion a quarter. This quarter came in at 13% below that. First quarter of 2025 was just a weak quarter. Retail customers aren't the story here. It's institutions coming in. A concentration limit exists to protect the people who bought the policies, and Delaware Life's improved by half a point, while the 19.8 billion sat exactly where it was. So somebody's going to tell me that the regulator already looked at these companies and they found nothing, which is true, but it's the most misread document in the story. Delaware publishes examination reports for free. There's one for Delaware Life, there's one for ClearSpring, and one for their reinsurance company. All three signed June 23rd, 2025. All three say the same thing. No significant findings, no material changes, no recommendations. So a regulator examined these companies and they found that there was nothing worth writing down. Look at those dates again. Every one of those examinations covers the balance sheet as of December 31st, 2023.
It's tempting just to go live and just read things for 3 hours.
The restatement that took Delaware Life from 1.3 billion to 18.3 billion came after that. The grand jury subpoenas landed in February of this year. After that, the $1.5 billion I just showed you is from a quarter that ended more than 2 years after the examination date. An examination is a photograph. This one got taken at the end of 2023 and developed 18 months later. It can't show you anything that walked into the frame after it was taken. So that's not a criticism of the examiners, it's just the way dates work. So why sell a basketball team instead of doing something clever? Size it first. The Lakers sold at a $12.5 billion valuation, depending on where his stake sat. That's something like $6.4 billion to $8.3 billion gross to him, almost a requirement of roughly $20 billion. The biggest asset he had covers about a third. And four things stop the clever version. Nobody wants the paper. And you saw the market price that this week.
Sounds like Claude, right?
Salmon's Financial, a company whose only connection here is a non-voting minority stake in Guggenheim that's been selling down for years, watched its bonds widen from 147 basis points over the benchmark to about 240 in a week. And that's what credit markets thinks of the proximity to this. There's a lot more on the Substack that I published last night. It's at eventhorizoniq.substack.com. The net of all this, Mark Walter's got to sell some stuff. He's only got a third of the way there. The LA Lakers doesn't cut it. And next on the docket for him is likely selling the LA Dodgers. And that might not even cover it. Watch for the quarterly filing that's going to be filed probably in the next week or so as the next shoe to drop in this whole case.
So there we have it. There's going to be 20 more billion. No. 8 billion more he has to come up with. But anyway, Eric Jackson
sold the LA Lakers in about 72 hours.
And see if he has something to say on the topic. More likely, more interestingly rather, see if he has something to say off the cuff about it, because Carvana is really the only thing I've seen that Anchovy Capital mentioned about market moving events related to this insurance unwind. So Eric Jackson, give him a follow. We'll see if we can get him on the program. All right. What else is going on that's market related here that appears to be really, really interesting here? So this guy is all about AI, excess returns. This is an interesting one, Shark Ninja. This is very much, this is like Chris Camillo style, another market wizard that Chris Camillo turned 20,000 into 3 million in 3 years, and then he turned into 80 million since then, without taxes and withdrawals, about 800 million. But Short Bear Lucas taking a feather out of Chris Camillo's book here with Shark Ninja. So Dyson is, a famous inventor of the incredible vacuum that people actually like, and I'm not sure that Short Bear is bullish Shark Ninja, but I'm not sure that he isn't either. And if we take a look at, I know Lucas loves a good, technical analysis. There could be a pyramid opportunity here. If it holds, we'll see. It would be great to have him on the show, see what he says. But if it holds this earnings level, sort of a stock B, episodic pivot, Christian Koulibaly swing trade opportunity. I don't know. Go ahead and give him a follow at the Short Bear. That's BEAR, although he goes long too. See what else is really moving here. I think this account's great. It's just more of a, more of a details account than like a predictions account, which is great. You need both. But Wall Street Engine. Oklo is the Sam Altman linked SMR company, small nuclear reactors, which hasn't really done anything. I mean, it's been in the same breath as the quantum stocks, right? It hasn't really done anything interesting since last year. It was, definitely a push in April, May. But if we look back, this is really the guts of those two moves. So interesting to bring that up now. But go ahead, give Wall Street Engine a follow. See if there's a person behind this who wants to get on the show. Great to have them. All right. Zero hedge. This is a mainstay, a staple of the timeline. Looks like he's got maybe he's got a take on the private credit aspect, because that's where the reverberations could be. AI SPVs, which are funded largely by life or property casualty money. That's interesting. It'd be great to talk to Zero Hedge about that. Give him a follow on here as well. Somehow I don't follow Zero Hedge. Who would have thought? All right. She's on the timeline always anyway. All right. We are out of compute is definitely a take. Would be interesting if this is sort of, you know, he is a non-technical member of the technical staff. So it's possible that Nick, you know, if he worked at OpenAI, he might not be saying this. We'll just say that. So I'm sure Sam Altman has a reason to say this, pausing, but that is the question, right? Is it we're out of compute? Is it a security question? Is it an optics question? And I don't mean optics like optoelectronics. I mean, like they say on, you know, public radio and stuff, brand image. They don't want to get the image of being the next anti-government frontier model company. So Nick, give him a follow. But in terms of, again, market moving events, pretty quiet. It's been pretty quiet. And these guys are good. They definitely do futures, but if you do futures, and you kind of have to look at the dollar anyway, these guys are always live. I'd take a look at them. John Arnold, famously probably one of the best energy traders of all time, up with Bill Perkins. Energy markets, we're not talking about oil. Believe he worked at Enron and then spun out and had his own firm. Don't quote me on that directly, but he's definitely had a large push on X talking about philanthropic projects and sort of being a balanced commentator on areas that could use more funding that maybe the government doesn't cover. So give him a follow. It'd be great to talk about it at some point. But I don't know if right now is a moment for oil, given that we're kind of in no man's land. But of course, he doesn't look at oil the same way we do. So John Arnold. We'll see what other folks have to say here about memory. It would really be interesting. I mean, we've really beaten to death, I would say, the Mark Walter name conversation, and also the memory conversation. So there are other conversations going on. I just don't know how many there really are. So we'll see. We'll see what sectors are gaining interest going into the end of the day, going into the close in about 10 minutes. I might be about to get liquidated, some of my position. Sometimes that happens right before the close. 2x leverage is the limit. Leopold taught us that. But yeah, as we sort of head into, this guy's great too. Shares a lot of news pretty quickly. This is interesting. Crane shares is very vocal and visible, and looks like they've got an ETF bent to them, robotics bent to them right now as well. These companies maybe aren't that interesting for U.S. markets, but it's good to just take a quick look over that as well. So that's pretty much it for today's markets. We'll see what other folks have as we close, but I think most of the conversation has basically been around around memory unwinding, as we have in the title, around Bitcoin sort of being slightly interesting, not super interesting, but let's hear from this guy. He does seem like he's pretty serious, and he is talking about the market. And he's also attracting RIAs, so this might be more of an investor approach.
Much more different projectile.
Advisor approach, but it's kind of all the same. You know, advisors are advising you, you're advising yourself. It's the circle of advisement.
In your portfolio, maybe not as much performance, but more stability. But let's talk about what we need to know before the bell this morning. Like I said, I wanted to run through some factors this morning of the markets because there's been some interesting dynamics of what's been happening underneath. Again, what happens on the headline, as I was saying earlier, tends to be very different than what's happening in your portfolio. So this is one of the things that gets kind of challenging for investors. It's, you know, the markets are doing this, but my portfolio is doing that. Maybe your portfolio is doing better than the market. Fantastic, great. Maybe it's not doing as well as the market, and that's certainly concerning in a lot of cases. But this is basically because of where you're invested. Here, let's take a look at a few charts here. So this first chart is momentum. This is the momentum index. So the holdings of this index change over time as, you know, stocks that are performing well, that have momentum, come into the index, and when they lose momentum, they go out of the ETF. So again, we've seen this, and when you look at this, this is the momentum ETF. Take a little mental snapshot of that picture. And let's take a look at SMH, which is the semiconductor index. And you'll see that they look almost identical. And the reason they look almost identical is because mostly semiconductors dominate the top 10 holdings of the momentum ETF because they have the most momentum. So there's been a very, very high correlation between those two. But yesterday, semiconductors reclaimed their 50-day moving average. They're going to lose it today. This morning, like I said, semiconductors are down pretty decently this morning. We're going to see a bit of a pullback, but they remain on a buy signal here, and they're not extremely overbought yet. So we may get a 1 or 2 day pullback, maybe come back down, test this 20-day moving average, and then try to make a bit of a move higher. We'll see what happens with that. There's still a lot of momentum chase in that sector. A lot of investors still chasing that. The valuations are fairly cheap, and earnings expectations still remain very high here. So again, this is just kind of an interesting dynamic to pay attention to. Went through a decent recovery in decent correction in semiconductors, worked off some of that overbought momentum condition that you had, and now you're starting to get some money flowing back into that sector as well. We'll see if that continues or if that tends to peter out. But looking over here, this is the different story, like I was saying. So this is IGV. Again, it's had a very, very sharp rally here as of late. And then I want to jump over from there and go into the value index, because this is where we start to see, you know, a bit of difference in overall performance. So this is the Vanguard High Quality Value Index. Very smooth transition higher. Again, value has been doing very well this year. It's been very stable. So again, this is what I'm saying. Once you're, you know, if you're in the value sector, that's been a much more stable investment. Yes, it hasn't been nearly exciting as being invested in semiconductors, and you haven't made nearly the rate of return. But this has been a much more stable environment for investors just to grow their wealth this year and kind of sidestep some of this recent volatility. And this is going to be kind of continue to be the case. And if we, you know, this is the main driver of the S&P is of course the mega cap stocks. These are the top 10 stocks in the index. Had a nice little bounce here, really just continuing this consolidation in the markets here. This is MGK, which is the mega cap stocks. Continuing this consolidation in the mega cap stocks, back on a buy signal here, a bit overbought, so a bit of a correction back towards moving averages would not be a surprise here for the mega cap stocks. But this is what makes up the bulk of the S&P 500. About 40 cents of every dollar is in these particular stocks in the cap weighted index. So there's a very high correlation. This rally here just recently in the mega cap stocks and this kind of consolidation looks very, very similar to exactly what's happening in the S&P 500 right now. You'll see that exact same pattern show up because of that weight of the mega cap stocks. So, you know, look at your portfolio, how you're allocated. If you've got a lot of weight in semiconductors and mega caps, you're going to look more like this S&P index. If you're going to be more into the value side of the ledger, stocks in the energy sector, of course, and staples and discretionary utilities, et cetera, you're going to have a much more different projectile in your portfolio. Maybe not as much performance, but more stability. And when we talk about weathering long-term market cycles, sometimes having lower volatility, yes, you give up some returns, can certainly help you weather the longer-term trend of the markets. All right, that's what you need to know before the bell this morning.
All right. Well, I feel informed basically by the things everyone else is buying, and then you won't feel like an idiot. That's my takeaway. But anyway,
look at your portfolio.
Could be interesting to talk to him.
If you've got a lot of
weight,
weight.
Tag in this. Maybe I shouldn't tag him in this. Palantir is definitely cooling off, and doesn't seem like it really, is an attractive buying opportunity right now. But that could change. I wouldn't want to short it necessarily unless you have a very tight stop. So that's one way to say that. Now, as far as just other takes, I don't think this insurance thing is a big deal. But finding out where the bottleneck is definitely useful. It'd be interesting to hear what this guy has to say.
Is there a moment in the last 1400 days when you as a team realize we have to make some changes to stay relevant?
I don't know if there was like an actual moment, but I think, okay, this AI thing, I remember like when ChatGPT came out in, what was it, like October 2022? Yeah. And I was like, okay, this is different. But then it was like, if I'm honest, like maybe 6 months of like, let's like keep tabs on this thing. And then after that, it was like, okay, this is like going to be very disruptive to the world. And if we don't like understand this and like know how to harness this, that is a huge difference in the trajectory of the company, right? And I really do liken it to like sort of the shift from like desktop software to cloud software, right? And there are many companies that didn't make it past that, right? And there are many companies that thrive through it. And ultimately, the world's a better place. Businesses, like, it's so much easier to start a business now because of this. And so I think we kind of realize that like this is something that could be potentially very, very big for small businesses, and we need to sort of put this in the power of small businesses. And when I looked at things like OpenClaw, Claude Cowork, I saw a ton of potential there. But like, if anyone who has used OpenClaw, like, try to set it up, it is only for the highly technical and only for the like bleeding edge of AI native like folks out there. And there's like maybe 0.1% of the world that know how to like harness this thing and like use it to like transform how they run their families, how they run their business, right? And the other 99.9%, like it's just it's like too conceptual, it's too dangerous,
making sure the audio was good.
Friendly enough. There's many reasons why the vast majority of people out there in small businesses like have no idea how to use this thing, but the potential is there.
Well, maybe Grokbot is the new OpenClaw. You tell me. Oh, this is an all-timer.
And I
Listen
wonder
to this.
if I could figure out any of that. Other questions soon followed. Why are home prices diverging up and away from the household income trend line? Answer, if it's not income, it's leverage. What exactly are the incentives of lenders that make mortgages only to sell them on through to Wall Street? Answer, volume at the expense of credit standards. When interest rates bottom, how far could lenders push mortgage terms in order to keep refinancings, home prices, and loan volumes rising? The answer to this question would put a ticking timer on the boom and a date on the crash. Back in 2005, other questions stood out. How much is consumer spending dependent on cash-out refinancings? What percentage of jobs are dependent on the assumption of rising home prices? Won't AIG have to start posting massive cash collateral for the first time if it were down?
Used to be AIG, now it's AGI. Could be AIG with the Mark Walter thing.
Isn't it worrisome that Fannie Mae cannot find term sheets that describe perfect hedges against its massive mortgage portfolio? Are the rating agencies so conflicted that they could be this blind? In my letters to investors, I described a downturn that would be unprecedented, with no counterpart in the modern era. Wall Street's risk models would fall all at once, and every single CEO, every single politician would be disastrously wrong. I put my money where my mouth was. At its peak, I was short $8.4 billion worth of subprime mortgages and certain financial companies. The most we could lose was less than $100 million, thanks to credit derivatives. And at first, we did lose. It was a negative carry trade. Investors, business partners, and even employees questioned the strategy. Lawsuits were threatened. Our distress was reported in the press, and Wall Street looked to squeeze our short. Besides all this, I had to stomach what I knew was coming: a tragic end to the follies. This was not fun. I did not tap dance to work. But the firm survived. We turned the tables on Wall Street, and I became the 1% in a way I never imagined when I was sitting where you sit today. I had bet against America and won.
Damn, that's cold. But America for it. Eventually. It took a little time. All right, let's see what these knuckleheads have to say.
The difficulty that Hugging Face actually had responding to the incident.
The model providers have great reason to establish guardrails, safeguards, because these are super capable systems. The unfortunate side effect of that is, as a defender, I may not be able to respond effectively.
The challenge with the existing security tools that are out there is they really were built to tackle two things. The first being people and the second is malware. And AI agents and agentic processes are neither one of those things.
Even some of the more modern techniques like deception that work really well.
And it's sort of ironic. We're defending AI and we're also defending from AI. 50% of enterprise apps will be agentic by the end of this year. And the average enterprise has something like 6,000 or 7,000 unique pieces of software within their environment. The problem's going to get more complex and more challenging.
We seem to be speed running every technology cycle that's ever happened before this one. What is the path forward for a lot of this inference? Awesome. Well, thank you so much, guys, for joining us. I think maybe let's set the stage for the discussion. It's been a very active couple weeks. We've obviously had the crazy pace of AI development. Every week there seems to be a new model release. There seems to be new capability. There's some new Fields medal getting won, or some new vulnerability getting discovered. And in the news recently has been the report that models from Frontier Labs have found a way to escape containment and hack things on the internet, which has been a pretty interesting revelation. That's a very sophisticated capability. I guess there's probably two things happening, right? There's a discussion about, well, how secure is the internet actually? Also combined with like, man, these models are surely progressing and doing some great stuff. So We've got the two of you here to discuss this, and I think maybe Max, we'll start with you. One of the interesting things in the OpenAI Hugging Face story breach event has been the difficulty that Hugging Face actually had responding to the incident. And so maybe you could tell us a little bit about sort of like what was happening there. Why won't these models help the good guys? Like, what's going on and what's the deal?
Yeah, so I mean, super topical. Like the model providers have great reason to establish, guardrails, safeguards, because these are super capable systems, and we don't want attackers using them for nefarious purposes. And so they have a responsibility to make sure those guardrails are in place. The unfortunate side effect of that is, as a defender, let's say you're triaging an incoming bug bounty report or something of that nature. Oftentimes you're going to be asking very similar questions to a probing attacker, which is, hey, what piece of this software is vulnerable? How would I exploit it? Can you validate this, right? And so, the part of the side effect of these model providers doing their job is, as a defender, I may not be able to respond effectively. Now, for Hugging Face specifically, they had the luxury of having open weight and open source kind of in their DNA. And so they were able to, when they saw these cyber refusals or these guardrails being triggered, fall back to, GLM 5.2 in their case, but, could have been Communicate 3 or a Quen model, something that isn't going to have those guardrails in place. And so for defensive teams, flexibility is kind of becoming paramount, right? Like you need the ability to kind of fall back in the case of refusals.
Yeah, absolutely. And it's really, I guess the question would be, what is it specifically refusing? Like I guess the thing maybe for folks that are listening is like I get that it stops you from saying, hey, go hack this website. Sure. I mean, like, go to citibank.com and change my account numbers, right? And like the refusal makes sense there. But what are blue teams doing that is specifically generating the refusal? Why does it look like a hacker to the models?
Yeah, I mean, I think it's almost more helpful.
There's nothing like the suit and the t-shirt.
Sometimes to like flip the script, right? Like if I were an attacker trying to bypass a guardrail and I wanted to, let's say hack into pets.com, right? Like I may pull some, bundle from the front end, or, I may just like decompose and find, the entry point that I want to target. And instead of saying, go hack this system, I may say, hey, I own this code. I am a developer at pets.com and I want to, do an internal vulnerability assessment. So that slight rephrasing of the question might, trigger the model into wanting to be helpful and providing you input as to, here's some things you might want to shore up, and here's how an attacker might get in. Now, as an attacker,
This is like how I talk to GPT when I try to get it to write things for me.
The answer I wanted, and I might go ask it to go do those things, right, to validate that. And so I almost find it more helpful to look at it in reverse. Now, as is the case with any kind of, guardrail-based system, like you will run into false positives, right? Like we noticed a very fun one, maybe a quarter ago, where there's a security tool out there called Vectra, and it just so happens to be also a drug used by veterinarians to treat, I think, dogs or something like that. So we noticed folks using the Vectra tool were hitting a bio filter, right? Like, oh, this could be used to generate bioweapons, and so like we're going to refuse this request. And so it's not always an exact science, but there's just a myriad of reasons why you can run into this stuff.
Yeah, and so Nick, Neo is building a way to defend endpoints from these inference style attacks, or to deal with, I'd say, I guess they call it AI governance, it's sort of more broadly, right? But from a brass tacks perspective, like, all things ultimately come to the endpoint, right? Like the dust ultimately settles on the floor, and that's your infrastructure. How are you guys thinking about defending and playing in this kind of world where the automated attacks need an automated response?
Yeah, I think part of the challenge with the existing security tools that are out there is they really were built to tackle two things. The first being people, and the second is malware. And AI agents and agentic processes are neither one of those things. Exactly. And so what we wanted to do is get ourselves right at the layer between the human and AI interaction. So A big part of what we're building is a way to properly set guardrails and controls around the software before it runs. And we thought the best way to do that would be at the endpoint.
Yeah. Yeah, that makes a lot of sense. And it's interesting, right? Because the attacks now, if you look at sort of the way the models are behaving, it's a very different style of attack than what I would say the traditional hacker does, right? Like it is, to your point, not malware. And there is the element of social engineering, but there's also sort of the I'm going to use a payload that gets the model to do something malicious, right? And that's sort of like the category of attacks that are completely new.
Yeah, and I think what a lot of these things that we've read about recently embody is the end justifies the means in the mind of the model. And I think what people have learned is that regardless of guardrails that the AI labs are putting around these things, you can't rely on models to stop themselves or to understand context. And I think the most recent couple of attacks we've seen in the last few weeks really have shown that.
Yeah, absolutely. How do you think it's interesting on the blue team perspective, because I think, and you guys have noticed this, right? Like these models are all somewhat trained on varied data sets, and there's a lot of post-training that happens that's very different. And when you're responding to some of these things as a blue team member, you essentially get different outputs from different models, right? And so is the value proposition you guys are working on, I get the refusals part of it and routing around kind of the refusals, but it's also making sure you pick the right tool for the job.
Yeah, yeah. The reasons can really vary across teams, like from almost the simplistic tastemaker style, like, hey, I really like the way Opus presents a full page report, right, in the place of an incident. But then there are also more deterministic evaluations you can run on how well does a certain model execute a step-by-step remediation plan, right? Like how closely does it adhere to the steps that need to be taken? And so I think the most important part for blue teams is, because of the pace of progress, to have as much flexibility as possible to be able to say, hey, when Astra gets released by OpenAI, I have an upgrade path, and I know exactly what's going to improve and what's going to maybe require some TLC. And so today those teams have probably 2 or 3 options, right? It's you can roll with Codex or Claude Code and lock yourself into a specific model provider.
And vendor lock-in is always good.
Right. Yeah, we love it. You can buy something that is kind of incumbent vendor plus AI, which leaves you beholden to some level of opaqueness and what models do they support, et cetera. Or you decide, hey, we're going to host open weight, we're going to support all major model providers. And I think a single H100 costs $250,000 a year. And so that's just not a viable option for most teams. And you kind of want to look towards providers that are always going to be releasing at the cadence that the labs do and give you that flexibility.
And I think, Nick, it's interesting, right? Because we're going through this phase, and you're starting to see this in the GPU markets, which is where prices are going up again. Things are becoming more scarce. There's a lot of talks about shortages, and as coming from a firm that spends a lot of time in those markets with their portcos buying time, it is more than just hype. And it just seems like we're entering this phase of the build out where inference will be everywhere. Right, and so right now it's clear that there's inference in the data center, there's inference in the neoclouds, the frontier labs, and eventually it's going to end on the endpoint, right? And so I guess the question would be how is that seems like a very different thing to defend against than to your point, the traditional Chinese malware that wants to come and steal my keystrokes.
Yeah, and the thing we're really starting to see, which is wild to think about, is companies now for the last year, from a cybersecurity defender perspective, have really been obsessing over how do I lock down software from the AI labs companies, which do great things but also introduce new risk. But if you think about stats that we're seeing now, that 50% of enterprise apps will be agentic by the end of this year, and you can be sure that the half that are not will be rushing to become so in the next year. And there's even less vetting and understanding around what agentic process is, what back-end AI models they're going to be using, what guardrails they install and put in. And so I think that's going to put even more really more pressure on defenders to better understand how their employees are deploying using these type of tools. And the average enterprise has something like 6,000 or 7,000 unique pieces of software within their environment. And so you think about thousands of software instances becoming agentic in the next couple of years. The problem's going to get more complex and more challenging. And so that's why we think giving visibility and control into the software universe that's unfolding is going to be paramount.
Yeah, it's funny, right? It's because we're like, we seem to be speed running every technology cycle that's ever happened before this one. And so like in both the original days, there was always the client and the server, right? And there's always been this ebb and flow of information. Everything starts with a centralized hub of everything being important lives here, right? It's the server. And then over time, you have things like web, you have things like thick clients, you have different technology things that come that federate the data, that push it out, that kind of push the envelope. And we're like very much going through that right now, except sped up 100 times or 100 times. And we're now seeing all these inference and these tests go into the endpoint. Yeah. Like it's just fascinating. And I guess that means, maybe because, Max, you guys look across so many model providers, like, how do you think for blue teams, for the actual people that are defending this stuff, like, what is the path forward for a lot of this inference? Like, what do you think I won't even say end state. What do you think next week looks like? I mean, I know it's hard to think beyond like next month, but like, where do we get to? Because it just seems like all this, like, this feels like a watershed event for security teams where all of a sudden they were fine using OpenAI or they were fine using Anthropic, and now they're like, maybe we need our own inference. Maybe we should host our own models. Like, what are you kind of seeing out there?
Yeah, to be honest, we see people trying everything. We see people saying, we've got Devin and Claude Code and Cursor, and we have the open weight stuff running locally or through Fireworks. So it's really all over the map. I think what it means for a week from now, 2 weeks from now, like one thing I'm pretty confident in is like there are certain approaches that worked in the past that clearly aren't going to work. Things like using static detection rules for everything, right? Like that's, just
signatures are probably dead.
Yeah. Right. Like it's great for the minefield. Like, let me know if an admin hits this service in GCP that is a prod service.
All right.
For
let me make sure I can
other stuff, it's just
make sure your audio is good for you guys.
And no amount of tuning and adjustment is really going to make that stick. I think the other thing that's tricky is like, great, we should try and patch everything. We should try and get rid of vulnerabilities, but to think that you're going to get to zero there is also kind of a failed approach. And then even some of the more modern techniques like deception, right? That work really well. We're starting to see problems with, right? Like, oh, wow. Hey, there's a honeypot on a developer's device that contains AWS keys. Well, guess what? Our sales rep just asked to deploy something, and the agent went and found, the AWS key because it thinks that it should deploy it on AWS, and now we got a ton of false positives in the deception provider, right? So even newer approaches that were kind of like, hey, super precise, always going to work, are kind of being invalidated, and so there's just a lot of rethinking that needs to happen for these teams, and they need to be able to move quickly and be flexible to be able to defend their companies.
I hadn't even thought about the honeypot example. That's hilarious.
Yeah,
like it's sort of like
really crazy.
Wow, okay, maybe I shouldn't have sprinkled a bunch of credentials around my environment to test for that.
We saw overnight just like 100% true positive rate to just like a couple of our customers being like, this thing is like awfully noisy now, and we're like,
probably a bunch of CISOs that woke up in the middle of the night going like, oh, the honeypot's been tripped.
Yeah.
I guess to that point, right? Like I think it is funny, right? We are moving into a world in which signatures are dead, and the attack surface is now the total sum of human expression. Like, how do you think, like, that seems like a very different problem from sort of the legacy problems that security people have defended against.
For sure, and if you look at the evolution of cyber defenses, it went from signature-based approaches to dynamic behavior-based approaches. But at the end of the day, those behavior-based approaches made one sort of upfront bet, which is you could determine how software should behave, and you would look for anomalous behavior against that. And now with agentic software,
sure you guys
that just doesn't apply. And so, the example that you gave, and then also the example of full system control by different agentic software process. You can't really tune up or tune down your existing defenses to detect or not detect. it's like bringing a knife to a gunfight. And so really what we think it requires is a major rethink in understanding who's installing what can it do, how's it set up to execute on what it's installed for, and what is it doing. And believe it or not, like from a security perspective, most of those questions aren't currently answered because there was this assumption that you could know what software would do by its publisher or by its intended design. And those days are gone forever.
Yeah.
I'm literally dying of boredom.
It's interesting because you do see.
I realize what I've been missing. Jesus. All right. Let's see if there's any sort of market-related opportunities here. Oh, Wolf Financial. So these guys did Wolf Financial, I guess. Well, that's interesting. More about this person.
On these triggers, I said first.
This could be interesting. Let's tune in here.
This short clip is from my live trading room. You can engage directly with my fabulous team and me at leduketrading.com for all our
Is this a real person? Maybe.
research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. And I'm not surprised that this yen intervention Besant came in to do with euros is not bouncing strongly off that 155, but we're not really at risk of moving higher in what I call the reverse yen carry trade, where the dollar moves higher, is until or unless we can get and stay above that 160 again. So you see that trend line breakdown? So that is a nice start to a doji that says, nope, I'm not falling $155 yen. We're back inside the 200-day. And as you can see, the 200-day is still ascending. This is a lot of volatility on Besant selling euros to buy yen on that fateful Thursday, Friday. And lucky or good, we actually caught that live, which was hysterical. Anyway, point is, it has come back inside and the 200-day. So not a lot of risk on the VIX side in short duration. We do have the Qs hitting my price target, not if, but when, in my teacher's voice, of 735.77. So I've written about that for weeks and weeks and weeks, like literally weeks and weeks and weeks. Why? Because we had this dispersion unwind that I warned about on June 1st and then wrote about on June 2nd. Anyway, and then underneath the surface, we had this single stock dispersion unwind, and we came down to, I had 3 levels of short targets. Remember that? I had 682.77 with 676.73 with an overshoot to 664. We reached all 3. And then we had short covering. I said, as long as this candle right here stays above a close of the 10-week, we're good. And the trigger would be higher. We went level by level on these triggers. I said, first, we get back into 683, then we move into 701, and then I said it'll really get busy if we get above 70. Basically, this 701 will get really, really busy. And we did. We reached all these daily price targets, and this was the intraday. We had not reached it yet. And the last post I did on that level, I think it was July 4th. Anyway, doesn't matter. We're here. Now we have to get above this to really start taking off. And that's the level that is going to be a little bit more work. I'm going to say a little bit more work. But you can see what's happening with South Korea. The EWY has also stabilized and it pushed and closed above this 174.
Oh yeah, EWY. That's what Kospi is. Yeah, that got crushed.
Above the 10-week, that's bullish. You can see what happened with Micron. We also came down short into that 780, and then we closed above the 10-week last week, which is bullish. And you can see we made it perfectly into my price target. I gave 976 as a price target, and we hit it perfectly. Stayed there a little bit. Now we're above. Same thing with SanDisk. I gave this absolutely not if, but when 1189. Perfect. Overshot it, came back in, formed an evening star reversal. I said, this is really important, right? We have to get and stay above, very important, this 1463, and we did. We not only closed above 1463, that's the green means go, right? It's a morning star reversal, but it's also the 10-week. So obviously SanDisk is also moving higher. So you got the memory plays, you got the photonics, you got the semi plays. NVIDIA is of course all the rage. Even if it's moved slowly, it had a huge expansion candle. Very, very lovely. And then you have a podcast, if anyone knows, All In Podcast, and they had Gavin Baker on, and oh my goodness, is he bullish SpaceX? Like not a little bit bullish, massively bullish SpaceX. It's, I think, 40% or 42% of his hedge fund holdings. Big, big, big position in concentration risk in SpaceX. He's also extraordinarily bullish on NVIDIA. In some ways, he says NVIDIA is kind of becoming the central bank of AI. Scary. I mean, there's already a godlike complex on him, but anyway, Federal Reserve of AI is literally what he said. Sachs talks about yes, 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 until they're going to securitize and package it up and all that memorandum of understanding stuff with the big, big banks. That's basically what they're doing, like with mortgages. That's your cautionary tale that Michael Burry keeps reminding. So anyway, we have a lot of excitement in forward earnings being pulled forward. We've got a lot of CAPEX spending, and we've got a lot of paper gains. And in one particular, I want to highlight this. Amazon came down a little bit, and you can see it popping pre-market. Druckenmiller, for those who follow, he's positioning very strongly in Amazon. And Amazon is one of those where I think is going to be chased and maybe even turns into a swing. But Morgan Stanley came out this weekend and put a $500, we're talking double here, $500 price target on basically AWS, the Amazon cloud, to be 6 times larger than its current 170
Ticker question.
billion annualized expected revenues, right? On the road to 1 trillion of revenues over the next 8 to 10 years. So when I say 500 as a bull case bet by Morgan Stanley, they are looking out over the next decade. But long story short, they expect the price target, if everything goes well, in other words, bringing on compute capacity right now, if everything goes well, they're going to bring on 6 to 8 gigawatts of compute capacity in 2026, 2027 that will make this stock be valued at $500 a share. So by end of 2027, that's like a year and a few months, a year and a half. So, you know, this is a very bullish backdrop that you...
Let's just make sure my internet speed is rock solid. Yeah, it's good. I think it's below 100 anyway, so I can use that tester. Yeah.
That you've got with the NVIDIA bulls, the Gavin Baker bulls, the SpaceX bulls, the Amazon bulls, the Google bulls. Anyway, we have also my warning here that dollar is really, really at the heart of this as it relates to devaluation. Basent really wants this lower dollar, higher yen. That helps trade balance. It helps equity, inflation. So this is really a thing. It's still a thing. But let's just go to the heat map since I wanted to highlight the Amazon, the NVIDIA. Google also is operating leverage in full, not a little bit, but a huge operating leverage for Amazon and Google to have their ownership right now, paper equity gains in Anthropic and others, OpenAI, SpaceX, all that stuff, and to have CAPEX expense being treated as revenue in forward earnings. Okay, lots can go wrong, but the point is they still have control of an operating leverage boom, which is why they are getting so bullish as it relates to the street and or Druckenmiller and or podcast gurus. The point is we still have a backdrop of big picture. The AI trade is not done. Keep your eyes open for on swing trades. The Amazon with a lot of expectations higher into 2027, a doubling of price by Morgan Stanley, and a Druckenmiller position of size. And I would also say SpaceX with the Gavin Baker extravaganza, 42% concentration risk, and also Musk coming out this weekend and saying that AI is going to be the most profitable part of their...
All right, this person knows what they're talking about. Samantha LeDuc. I would give her a follow for sure. It'd be great to have her on the show. She definitely just described very well. Well, I'll be honest, I wasn't paying attention to most of it, but she did talk about the memory unwind, and she basically had a good argument for, yeah, I don't know. I already forgot what she said. You don't care about leads. Oh, they already listened to this guy rant. Oh, this is Eric Jackson. This is the guy. This is the Open Door CEO. No, it's not. It's not. Okay, what about this fella? Oh gosh, what are these guys up to?
Here with me on episode 2 back in November.
Right, see if I can
so
get
we got a big
some actual Ethernet splitting here.
Show today. I want to start right away with the S&P 500 price target. You see about a 15 to 18% return this year. We're up about 13% now. What's going on?
Well, first off, congrats. I think it was early November, episode 2, and I just love seeing the success, and that's awesome. I didn't jinx it in the beginning, I guess, with that second. You what? Dan Ives was number 1, I think, right? I'm pretty sure
he was in the first few.
Yeah, but anyway, it's an honor to get to do this in 100. Let's not mess this up. So it's not a secret to a lot of people. Carson Group has been pretty bullish. We've been overweight equities. We upped our target. We came into this year 12 to 15% target S&P 500 in March when a lot of long-term bulls were cutting their targets, telling us how bad everything's going to be. We never did. Now listen, when you're down 5% for the year and you look way up there and you see an S&P 500, 12 to 15%, that's a long way. But we hung tough, and we can get into the weeds of why. And then we upped our target a little bit with our mid-year outlook to 15 to 18% thing. It's kind of fun talk for a podcast. I'm a market strategist. I hate targets. I really do. I hate to have to give targets. We manage over $8 billion at the Carson Group of financial advisors all across the country. We have been overweight equities literally for over 3.5 years when we hung out, a long time ago. I know you thought I was crazy way back in early 23 when we told you this is a new bull market, but we're still overweight equities. Let's say the S&P goes to 15 to 18% sooner than later. That does not mean we're with the money we run, we're going to start cutting, running for the hills here. We're still pretty bullish here, Phil, overall.
I think that makes sense. I'm right there with you, being bullish. We are coming out of a pretty big drawdown this summer. We saw semiconductors sell off, tech sold off. But you have this great chart here. Stocks have never peaked in June. And I believe it's the only month of the year that stocks have never seen their peak dating back to 1950. When you look at this seasonality here, what stands out to you?
Well, I guess it worked again is what stands out. First things first. I know Jay Wood's been on with you before, and I think Jay even mentioned that stat. And it's true. I mean, it is, I call it is what it is. Since 1950, no month has seen the ultimate peak in June. We had a peak on June 2nd. We obviously had the volatility in June, the big sell-off across the board in AI and tech and semiconductors in July, the momentum massacre, as we all know. But then sure enough, here we are in August, and I jokingly wrote a blog recently, back to your regularly scheduled bull market. What's fascinating about it, though, if you just look at the S&P 500, the S&P was up 16% in April and May. All right. That's one of the greatest 2-month rallies ever. For like 11 weeks in a row, the S&P 500 literally went nowhere. Now, I know it's up and down, and I know under the surface, we can talk about how the fact that banks did great and financials did well, industrials did well, but tech and AI got slaughtered. But the S&P 500 simply went virtually nowhere. As a technician, I do have a CMT behind my name, Chartered Market Technician. Markets correct 2 ways, through price and through time. Well, this one corrected through time. It caught its breath through time after a 16% rally in 2 months. And that's necessary. If you're bullish, I love to see correcting through time because it even shows more strength as we went sideways. And now we're breaking out. A lot of stuff we can get into why we remain bullish here. But again, one more quick one. And I'm probably